Assalamualaikum and very good day to all viewers out there. Welcome back to my channel. Today's presentation will continue on the discussion of the question blooming, which is the company that we are concerned in the preparation of financial statement. Yeah, we are going to prepare the remaining financial statement. We have already been halfway through and we're going to continue with that, and we are now at adjustment or additional information number 5. So additional information number 5 is regarding tax charge for the current financial year. So the one that has been estimated by the Inland Revenue Board is 298,000. So this is the one that you are going to go and record as your tax expense in your statement of profit or loss in your line item. For the same issue, you have your tax paid here, 315,800. This is the one that you have paid earlier to the Inland Revenue Board, and that was earlier you paid 315,800, and now they charge you through 298. So for that, we need to do one journal entry just to give you some idea of the debit credit, right? Okay, you can see information number 5, which is related to tax, right? Related to tax, that one is you have to debit your taxation expense in the statement of profit or loss, right, with the information that you have, and that was 298, and the tax paid will be now eliminated and credited with the amount here, and that was 315,800. The difference, because you have paid more than what you should have. Yeah, basically you have paid you have overpaid, so the difference is what you call tax recoverable. So the tax recoverable is 17,800. So the 17,800, okay, that 17,800, if you can see the color that I used just now, purple, right? So that one will be put as your current asset, and the tax expense will be included in your taxation, a line item in the statement of profit or loss. Okay, just do that first. So now you have one item here, 298, your expense. At the same time, it will be included here, which is in your item here, that is your tax recoverable. So if you can look at the little note I put here, tax recoverable will happen when your tax paid are more than your tax expense, and the difference that you need to find out is 17,800 and will be included here. Okay, now we go to the next adjustment. Next information is related to number 6. Number 6.1 is on allowance for impairment of receivable, where you're informed that 5%, this is the estimation of the expected credit loss allowance of the company, that they have this lump sum percentage of 5% for all account receivable. It is assumed that it will be uncollectible by the end of the year. So this is the estimation that you are trying to find for your allowance account at the end of the year. So 5% here is from the uncollectible, 5% from the account receivable. There are no other adjustment, bad debts recovered, no adjustment for bad debts written off whatsoever. So what you need to do is just to find out what is this 5%, and that will be your allowance for impairment balance at the end of the year. And then you are going to compare with the percentage that you get with this allowance for impairment balance at the end of the year. So let's see how we do that. I have prepared for you the workings at the bottom here. Yep, information 6.1. So you can see here, the one that is expected to be uncollectible at the end of the year is 5%, and this 5% is from 416. 416 is your accounts receivable balance. Yeah, account receivable balance 416. So that one will give you 2,800. So this is the one that you will have to go and remove or reduce from your account receivable to get your net realizable value of account receivable. Okay, that one, there is no journal entry for this. But the difference between the balance that you have in the allowance for impairment account, this one is from the trial balance, And this is from the trial balance, beginning balance, which is the balance as at beginning of the year, 1st of January 17. The one that we calculated here is the one at the end of the year, 31st of December 17. So that is, for these two, there are no journal entry. But if you can see the one here, the difference between the beginning and the ending balance is there are no journal entry or no adjustment whatsoever. So for this allowance account during this year, so the increase is increase in allowance for impairment. That 8,000, yeah, is the one that you will debit 8,000 here. Yep. And you will also credit 8,000 in your allowance for impairment. So that has to be reflected in your admin expenses. This is under your admin expenses. Yep. It will be under your admin expenses, which is 8,000. So under your admin expenses here, you will now get your figure 8,000. And now you can total up your admin expenses, your distribution expenses, even your finance costs you can total up, because there are no adjustment regarding finance costs at all. We'll have to check that, but at the moment, admin and distribution, you are done. So when you are done, you will transfer that here, right? You will transfer that here, your figure. So those are the figure from here, right? And for the investment income for this question, there are no investment income. Investment income are the one coming from income that the company makes in other companies' shares or debentures, right? You can check the little note that I have there. This figure, by right, you should get that. But before that, let's look at the effect of the allowance for impairment. Not only there in the SOPL, but also what is the effect in the statement of financial position. Under your current asset, you need to deduct this amount, 2,800, this amount, yeah, from your account receivable. So let's go to the current asset section now. Your current asset section, which is here. Your account receivable will show 395,200. Where 416 is the account receivable balance minus the allowance balance at the end of the year, 2,800, no other adjustment. So you'll get 395,200, your account receivable. So that is the effect in your account receivable. And this account receivable is actually at your net realizable value, right? And you need to show the workings. I'm just putting the working in my little box there. Next one is the adjustment number 6.2. So that one is 6.1. Number 6.2 is here. Okay. Number 6, Roman 2. The company declared 6% final ordinary dividend. So this is actually a distribution of the retained profit to the ordinary shareholder and the preference shareholder, and this is the final dividend, meaning that dividend that were declared somewhere before the reporting date. Here is as at 31st of December, so this will be your liability, but the payment for the dividend will not be made in the current year, it will be made in the following year. So this is the final dividend or proposed dividend. And if you check in your trial balance, you have another dividend given here. Yeah, if you go to this section, there is an interim dividend. So this is the dividend that you have already paid during the year. This is dividend that you have already paid during the year, and that has already been recorded as your deduction to your profit. This is the distribution of the profit. So let's see how do we adjust for that. I'm going to record first the dividend payable in number 6.2. So if you go to the dividend payable here is the dividend that I'm recording for the distribution of the retained profits. If you have dividend relating to redeemable preference shares, do not include here. That should be included under the finance cost. If you have any final dividends on redeemable preference shares, but this is final dividends on ordinary and just the normal type of the preference shares. So you have the dividend. The rate is 6%. The 30 million is your share capital, your only share capital balance. The preference shares, the fixed rate is 5%. If you check the rate for the preference shares here, if you can see here, the dividend rate is 5%. For the ordinary dividend, the rate is not fixed. It will be determined by the directors and be approved by them. They approve 6%. So for the preference dividend, you do not declare any interim preference. So what you declare here, if you read the question, it was the full year preference dividend. So that was the dividend for the whole year. Times with the preference share capital 1.92 million, the amount, right, the fair value of it, or the carrying amount of it, 1 year is because it is full year, so you have 96. All these are your current liability, and because you declare from the profit, so we will go and debit the retained profits, which is to debit to the related, the retained profit is related to the dividend, right? So it is distribution of profits to the shareholder. So it will be 1.8 here and 96 here. So this will appear in the statement of financial position as current liability, but it will also be deducted in the statement of changes in equity under retained profit. This will be deducted under retained profit. So I prepared that workings for you here. So if you can see here, okay, for the interim ordinary dividend that was from the trial balance, you want to know the total, right? The total is 2796. This is from the interim dividend orange shares. The one that we declare at the end of the year is this, right? 1.8. And this one is 96 from our calculation earlier. So the total that you will have to show as your dividend in your statement of changes in equity will be 2796, which is from the interim ordinary and interim preference, if there is any. Do not include redeemable preference dividend, because redeemable preference dividends will be under your finance cost. So 2796 here. And this amount, as I said earlier, this is your current liability, because you declare, you incur, but you do not pay yet. So that one has to be your current liability. So it will be included, that figure, dividend, yeah, that dividend figure there, 1896, which is the 1.8 plus 96 here, the one from ordinary and the one from preference, right? That will give you the total for your current liabilities as well. So your current liabilities total is the figure there, right? You are done with that. Now, last one, a few more things to do. We are almost done actually. Okay, the last item is on NRV of the inventory. You have the net realizable value of the inventory. That was 300,000. Okay, for the dividend that you have done, make sure you have done the checking here. We have done for our receivable, yeah, this earlier just now. We also have done for our what was it, allowance for impairment. You can see that all items that we did, we have checked and go thoroughly. The checking should be done. Tedious work is worth it if you can get good marks, right? But make sure you do it fast. This is a tutorial session, of course I'm doing it slow, right? The last adjustment, yeah, the last one, last information before we can proceed with the rest. NRV of the inventory, okay, NRV. So this one is related to IAS 2 inventory, MFRS 102 inventory. NRV was 300,000 according to MFRS 102. You know it should be valued at the lower of cost and the net realizable value. Go and check your inventory here. The cost, this is the inventory at cost. So we check, it is 307,200, the cost. The NRV is lower. It is 300,000. So it shows that there is going to be a measurement of inventory at net realizable value. So if you can have this little note here, you can check and read that. So the adjusting journal entry would be for the difference between the inventory at cost and the inventory at the net realizable value, where that one will be 7,200. So the cost of sale has to be adjusted with the write down amount of the closing inventory. The cost of sale has to be added with 7,200. The closing inventories will have to be deducted with the write-down amount 7,200. And that 7,200 is 307,200, right? Minus 300,000. Okay, that was the cost minus the net realized value. So you have 7,200. Go and adjust to your SOPR, add to your cost of sale, go and deduct to your statement of financial position under your inventory. So now you can go and do it in your cost of sale here. You're almost done, as I said. Okay, 4857440. How? I have this working here that you can check. Right here, the details are here from information number 63. And now you are done with this as well. You can now find your operating profit. Yeah, your finance cost. There are no other changes because this one is related to the finance costs that have been provided enough, just to share with you that part, for the part relating to the bank loan. So if you go and check, take your calculator, 3.5% from 256 for 1 year, you'll get exactly 8,960. So that is already been provided correctly in your interest on bank loan, this item, right? That has been, the calculation will be 3.5% times 256,000 times 1 year. Okay. So therefore, no adjustment. So we'll now get the finance cost to be this figure, 8690. Put that here. Yeah. There are no investment income, profit before tax, profit after tax, right? This is your other comprehensive income section. Okay. And you have now you settle your total comprehensive income, total profit or loss and other comprehensive income. So for your inventory just now, your inventory, because we write down, right, that should be shown at 300,000. Then this is at NRV because inventories should be stated at the NRV since the write down was 6,700 and the inventory is at the NRV 300,000. So you are done with that. You can now go and do your remaining things, which is for your item like share capital and reserve, as well as your item related to PPE. So let's do the share capital and reserve first. There are no adjustments for the share capital. You go and check if there are any share buyback, check if there are any bonus issue, check for any conversion of debentures into shares, check for any treasury shares or whatsoever, check for right issue, check for that, check for redemption. If you, check for any redemption that is using the retained profit that you transfer from the retained profit to the ordinary share capital. That may have also affected here. Not that redemption price, but we are talking about the transfer made from the retained profit if you use retained profit to cover the redemption. So preference share capital, no changes. Asset revaluation reserve, beginning balance, none. At the end, it is 496. General reserve at the end, 983,600. Retained profit, 5417640. Look at the general reserve. There was a transfer to general reserve. And these are the item related to your surplus, and these are the figure that you should get for the total of your reserve. The total reserve will be 496 plus 983 plus 5417640. Total share capital will be 3 million plus 1920. This is the journal entry in case you are interested. The journal entry for the transfer made from retained profit to the general reserve. This one will be transferred to the statement of financial position, this one as well under the equity section. Let's do that. Okay, here it is. These are the two things here. Okay, and these are the two things, the total there. You can check these total balances, all the little notes that I put there, right? And total balances from all reserve. And these are the total for the asset and liability section. We will get this total shortly. I will reveal that. We'll see whether you can get this or not. I will show you. Yep. That figure 35,154. Should see whether you can get that. This is the total for your statement of financial position. It should be balanced, right? Because you guys are always worried about balance. So keep that balance, right? 4,137,240. Okay. Why is it not balanced? We have to check on that. Maybe this is the reason why. I will check for that. Let's just do your statement of the rest of the thing that you have here. I'll just reveal it for you while I check the item for you for a while, right? Okay, let's check your figure there. You have your, go and check your carrying value. Your carrying value for your item, check for that. Go and check your balance carried down for your accumulated depreciation account. Check for that as well. Okay, let's see what we have here. The balancing figure should be 41,317,240. The figure here is should be 35,484. Okay, I've done something wrong here. It should be 329,600. Make sure you don't do the same error. So that one, where do I get that? Let's just go and give you an idea. Where do we get that? That one is from the intangible asset. So you should have correctly copied the figure, right? Okay, where is it? This is the intangible asset, yeah, 329,600. You should copy them correctly. Okay, now we are okay with that. So 41,317,240. So this figure here, there are no investment that we have. We don't have any investment. So if you can check here, your balance for the total here, okay, is the balance coming from the cost. And then go and see that I've already done the adjustment for the derecognition. The same thing here as well. You can see that this is the total accumulated depreciation. And these are your net carrying amount for your PPE 35,154,600 that you will transfer here. So the figure here will be transferred to the statement of financial position as your carrying value. Okay, with that, we are done with all. Okay, I will reveal this part as well for you. Okay, so these are the detail. You need to transfer this here, but make sure that you complete all your workings and all your movement in your PPE. With that, I thank you. I hope that you will be extra careful when you transfer figures so that you won't be transferring the wrong amount, right? Make sure you do correctly. With that, I thank you. Always practice. I'll see you when I will see you. Yeah. Inshallah. Do more questions. Always practice a lot so that you will get better each day. With that, I thank you again. I'll see you when I will see you. Assalamu alaikum warahmatullah.